Greetings to all valued clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for Tuesday, 8th of August in this video. So first of all, let's review the major market movement. The first instruments we are referring to the dollar index in 4-hourly charts. So the US dollar was roughly unchanged against a basket of global currencies on yesterday and fell by 0.05% to 93.32, struggling to add to gains following Friday's strong US jobs report after a top Federal Reserve official attempted to cool rate hike expectations. So on the heels of its biggest one-day gain of the year on Friday, the dollar made a subdued start to the week as investors awaited key inflation data this week, while St. Louis Federal Reserve President James Bullard suggested that low interest rates are likely to remain appropriate over the near term. So according to Bullard say in slides prepared ahead of a speech to the America's Cotton Marketing Cooperative 2017 conference in Nashville, Tennessee, he said the current level of the policy rate is likely to remain appropriate over the near term. So Bullard does not vote on monetary policy this year at the Federal Reserve, thought he participates in the central bank regular policy discussions in Washington. So Bullard's comments came ahead of a speech by Minneapolis Federal Reserve President Neil Kashkari, which market participants are likely to closely monitor for fresh clues about monetary policies following the strong US job numbers last Friday. So also weighing on the dollar was renewed geopolitical uncertainty after fresh sanctions were imposed on North Korea for its nuclear and missile programs. Inflation data later in the week, however, are expected to dominate move in the dollars, with producer price index and consumer price index data due Thursday and Friday respectively. Meanwhile, the sterling struggled to make up ground against the greenback and fell 0.13% to 1.3026, weighed by the Brexit woes as Conservative MPs vowed to fight a $36 billion bill for leaving the European bloc. As for the commodities markets, gold price traded slightly above break-even on Monday and rose 80 cents or 0.06% to $1,265.40 a troy ounce. So it was bouncing off session lows after the dollar came under pressures following comments from the top Federal Reserve officials. So the gold price continued to pare losses following a slump on Friday on the back of strong non-farm payrolls data suggesting the US economy could sustain further rate hikes, while St. Louis Federal Reserve President James Bullard said that low interest rates are likely to remain appropriate over the near term. So the gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as buildings. So the slowdown in inflation of the United States has weighed on the prospect of rate hikes later this year, pressuring both the dollar and bond yields while helping the yellow metal trade close to 7-week highs. So the producer price index and the consumer price index data are slated for Thursday and Friday respectively. So a slump in trading volumes due to the holidays in Asia, however, is expected to keep gold price range bound. While the oil price was fell 0.7%, down 34 cents at $49.24 per barrel on Monday, on selling triggered by a rebound in productions from Libya, largest oil fields, so along with worries about a higher output from OPEC and the United States. Output at Libya Sharara fields was returning to normal after a brief disruptions by armed protesters in the coastal city of Zawiya, the National Oil Corporation said. So the field has boosted Libyan oil productions, which climbed to more than 1 million barrels per day in late June. So the doubts have emerged about the effectiveness of output cuts by the organizations of the petroleum exporting countries and other big producers including Russia. OPEC output hit a 2017 high in July and its export hit a record. So officials from a joint OPEC and non-OPEC technical committee are meeting in Abu Dhabi on Monday and Tuesday to discuss ways to boost compliance with the deal to cut 1.8 million barrels per day in productions. And the oil output in the United States remained high, even though big huge data on Friday showed a cut of 1 drilling rate in wake to August 4th, so bringing the US rig count down to 765. And the US weekly oil production hit 9.43 million barrels per day in the week to July 28, which is the highest level since August 2015 and up 12% from its most recent low in June last year. So Morgan Stanley said in a note on Monday it expects to see US oil production growing by 900,000 barrels per day in the fourth quarter versus a year earlier. This is up from a forecast of 860,000 barrels per day earlier. So now we're gonna review the highlighted economic data and events, right? So there are no any data that released on yesterday due to a quiet trading Monday after the non-farm payroll on Friday. So as for today, we got only one data to be focused, which is from the United States of the JLOTS job openings for the June data, right? So it is expected to be stronger than previous by the focus of 5.755 million, okay, compared to the previous 5.666 million. For now, we're gonna review the technical analysis, right? So the first instruments we are referring to the Great British Pounds against the US dollar pair in 4-hourly charts. So the GBP USD pair was felt below the support level of 1.31000, right? So currently traded around 1.3040, and it is remained considered as an uptrend, but it is currently retracing, so a price closure below 1.30000 is a signal for it to move further lower towards the next target of support level at 1.29300. And based on the indicator of both moving average lines supporting for the downward statements, with the both moving average line was formed a dive cross above. Alright. While the euro was remained traded as an uptrend against the US dollars, but it seems like losing momentum, so it is expected to be ranging between 1.17300 and 1.19000 for short terms. So the price closures out of the range is a signal for it to move further to the directions. Either the price closures above 1.19000 or 1.17300. As for the Kiwi, the both moving average line of NZD USD in 4-hourly chart was formed a dive cross above as well. So referring to MACD, the both movement line now is pointing downward and expanding, and the momentum is stood at the level below 0. So these are the signals for the NZD USD to move further lower. So NZD USD now was changed to the direction was changed to downtrend. So a price closure below 0.73300 suggested to drop further towards the next target of support level at 0.72800. As for the Aussie, the Australian dollar traded against the US dollars remained in an uptrend in the 4-hourly charts. Okay, so but the price currently is retracing, so a price closure below 0.78700 suggested to retrace more in short terms, and the next target we can refer to 0.78200. Right, referring to those indicators, the both moving average line was formed a dive cross pattern above. So these are the signals to push the to pressures on the USD pair to move further lower. Having a tag in Japanese yen, so the pair USD JPY remained traded in a downtrend, but it seems like losing momentum to move further lower. So it is expected to be ranging between 110.900 and 110.000 for short terms. So a price closure out of the range is a signal for it to move further towards the directions. Okay. And meanwhile, looking into the commodities markets, the gold price remained traded in an uptrend, but the price currently is retracing, so a price closures below $1,254 is a signal for it to retrace more in short terms, and the target we can refer to $1,248. Okay, referring to those indicators, the both moving average line almost form a death cross, so it's a signal to pressure the gold price to move further lower. As for the oil price, the West Texas Intermediate oil price in 4-hourly charts is remain traded in an uptrend but seems like losing momentum, and so it is expected to be ranging between $48.30 and $50.20 in short terms. So a price closures out of the range is a signal for it to move further towards the directions. Okay. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.